How's it going, everyone? It's Sam. I appreciate you looking at my channel and you maybe are viewing it for the first time. So this is my second channel if you came from my first channel. I want to talk to you today though about my Webull growth portfolio. So I have about $2,000 to $2,500 worth in this portfolio. Not my biggest portfolio by any means, but it was the one I recently transferred from Robinhood and into Webull. So I do want to say before we get into it, if you are interested in starting up with Webull, you can check out the link below. You can get 3 free stocks if you deposit $100, but let's get into it. So the first stock on this list is NIO. So this is a stock that I just bought recently, and it's one that I'm pretty excited about. So they are a big EV company, especially in China. They are reporting really great numbers. They have increased month over month, and over the last year, this last month, they increased to about 5,000 deliveries. So from 2019 to 2020 in last month, so in September or October's numbers actually, they have increased from about 2,500 to about 5,000 deliveries. Now, I think they have a big market opportunity in China, and I think they're going to be able to expand. They're only about a seventh to an eighth the size of Tesla in market cap, and they're selling about or delivering about 10 times less vehicles. So they do cost a little bit more for each delivery compared to Tesla in market cap, but they have a lot more room to grow. So hopefully that makes sense, but they are a little bit more expensive than Tesla, but again, they are much smaller at this point. The next stock is Qualcomm, and they are a semiconductor company that makes the 5G chips in the new iPhones. So it's a pretty exciting company. They have a lot of growth potential because they make those 5G chips, and they should be able to give you a nice dividend. I think it's a couple percent now. When I started investing in them, it was about 4%, but they are an exciting company. I own just one share of them. You can see the quantity and the market value underneath, but I own one share of them. It's a pretty exciting company, like I said, and they should report some pretty good numbers with the upcoming launch of the new iPhones. So that's something that's exciting too. The next company is Virgin Galactic, or SPCE. So they are a spaceflight company that is commercializing spaceflight. So I own 7 shares of them. They are an exciting company too. Just a really cool company that is trying to revolutionize the way that we work and the way that we're able to experience the world. So they are a company that is really on the cutting edge. They're very speculative, but very high reward too. So very high risk, very high reward. Definitely check them out if you haven't checked them out already. The other company is Foot Locker. I own 2 shares of them. They are a company that I've owned for a long time. In my M1 portfolio, I bought them when they were $18 or $19 a share. Now they're up around 37. In this portfolio, I'm down a little bit on them, but I just hold a couple shares of them, and they do pay a nice dividend. So they paid me out recently, but they did have to cut it around the pandemic, but they were paying about an 8% yield for a while. So if they bring that back up, we're going to see some nice dividends there. They reported really good earnings from their online sales. So they were actually able to sell a lot online over the pandemic. And once they are opening up their stores, I think they're going to report really good numbers. Once we start opening up the economy more, people are playing more sports. They have to sell, they have to buy more equipment and stuff like that. So it's definitely something that has some growth potential there. The next company is Hyliion. So I only own 1 share of them. I bought it a while ago. I just kind of dipped my toes in the water with them. I feel like that's more speculative than a lot of these other stocks. So I just never really got into it, especially with more people going to full EV. I think that there's going to be a huge market for EV. Hyliion does conversions of semi trucks to these hybrid trucks, and they're coming out with their own EV semi also. But I just haven't really bought a ton of them. They are pretty inexpensive compared to where they were though, so I might pick up some more of them. Facebook is the next company, and I really like Facebook. They're my largest individual holding. I really like where they're at now, and they went up pretty big today. I'm up a lot across the board in Facebook, about 100%, because I was buying in some of my other portfolios. I was buying around 150. So I am up a significant amount on Facebook between all my portfolios, but I hold just 2 shares of them here. I think that they have good growth potential in front of them. They're a huge company that has a lot higher growth and is more inexpensive than a lot of its peers. The next company on this list is Workhorse, and this is the portfolio that I hold the most amount of Workhorse in. Workhorse has been back and forth, so I have a cost basis, I believe, under 19. So on here, it says something different because I transferred it in. But I have a cost basis around 19 for Workhorse, and I've been buying them along the way. So I bought them at 16 or 17, then up at 19, then 22, then again when it fell back down. I still feel good about them. They are a pretty speculative stock. It doesn't get much more speculative than Workhorse, but it is an interesting company that I think has some good growth potential, especially around the USPS decision. The next company is Walt Disney, or just Disney. I have 2 shares of them in this portfolio. They are focusing on streaming more, so I think it's a really interesting opportunity to get in on Disney before people think of them as a tech company. And whether we open up the economy and they can open up their parks, or we continue to shut it down or make it harder for people to go out and about and experience things, then they'll focus more on their streaming. I think it's good either way. And then the last company in this portfolio is Innovative Industrial Properties, IIPR. They are a medical marijuana REIT. So I have to be careful on my other channel about saying that because I'll get demonetized, but I'm not monetized on this channel yet. So I'll just say it. They pay really nice dividends. They've been growing a lot. And I like them because they're the only medical marijuana, or marijuana, I should say, because they have recreational marijuana companies too, I believe. They're the only marijuana REIT that is out there right now. So they offer a lot of cash infusion for companies that can't work with banks. So they are an interesting company if you haven't already checked them out. So let me know your thoughts on this. Thank you for watching. Let me know if you guys have any questions and kind of what your portfolios look like. If you have some high growth stocks, let me know. Also, if you do want that link to Webull, you can check out the description below. Thank you guys so much. I really appreciate it, and I will see you in the next video. Bye.